Good evening, traders. It is Friday, December 2nd, 3:36 p.m. Central Time. Markets have been closed now for about 36 minutes. And, well, do you guys feel manipulated? Well, I have proof, and you're looking at it right on your screen. This morning, as I was watching the pre-markets and had my trading platform open, I saw so many gaps, and I've never seen that ever before. Ever. And you're looking at it right now on your screen. And let me point out to you some serious manipulation going on, okay? This morning, VIX gapped up, okay? I've seen that before. That's not out of the ordinary. It gapped up, okay? And then it surged up, about, this is a 5-minute chart, so, a good hour before opening bell, at least. And then right at opening bell, it gaps down, okay? It gaps down. And then about 10 minutes after opening bell, it gaps down again, okay? And collapses, right? And here I was the whole time during the pre-market session. I was like, man, I'm watching VIX go up like this. I'm like, oh no. That's when I sent out that VIX alert this morning in the pre-market session, right? I was like, oh no. And then, at opening bell, gap down. 10 minutes later, gap down again. So it basically just completely manipulated. The system was completely manipulated. It went from all the way down here, gap up, surge up, gap down, and it ended up at the same place where it started, guys. That's my point. Total manipulation. And look at the MACD. The MACD reflects the same action. I'm like, I couldn't believe it. Okay, so what does all this even mean? Okay, let's. Actually, I have. So that's the conspiracy side that I just told you about. But now the good news. That was the bad news. That there was some serious manipulation going on. But here's the good news. And I'm going to show you this. Guys, they are laying out the carpet, laying out the red carpet, and they're begging the bulls to rally. They're begging the bulls to come back. I'm not joking. I'm going to show you proof of this. Okay. Let's go to the next slide. Okay, but first, before that, all right. This was this morning, by the way. Yeah, this is my VIX alert, stock market outlook in the morning. Right. Okay, right here. So I got the screenshot up when I had it up. It was 9 minutes, almost 10 minutes before opening bell, and I was just like, Dow's down -443, NASDAQ -250, S&P -63, -443. That was while the Dow was actually, the markets were still actually kind of coming back up. It was closer to 500. I don't know the exact number. I didn't even look. I was like, oh my gosh. Okay, so anyways, that was because of the non-farm payrolls report, whatever. Okay, you guys probably saw that already. It was still very elevated, even though it was slightly lower than the previous. It was still very elevated. That's what made the markets just drop straight down like that. Okay, but despite all that, and despite all the manipulation that I just showed you, right? VIX ended up at 1908 today, guys. Almost 18. We haven't seen that. I'd have to go back and look. We haven't seen that in a long time. Okay, so we went from -443 on the Dow to up 34. What's up with that? See what I'm saying? I mean, we were down -2% on NASDAQ, -250. Oh, we ended up down just -20. Okay, so I'm going to show you a lot of these things today, but it's just quite interesting. All right, so. Okay, actually today is going to be quite different than what I've done in the past. I've got a pretty big lineup for you guys. I'm going to cover the VIX, the dollar. The VIX and the dollar, those are the top two that are laying out the red carpet for the bulls to come back. It's like they're begging the bulls to come back. But you're probably wondering, what in the heck happened today then? Why did we gap down, right? Why did we start the markets way down and then come back up? Okay, well, my theory on that is that's the market's way of taking the bulls' money, who had already bought calls, right, for the last couple of days, thinking it's going to go higher, right, and whoever had your stop losses set, I guarantee you didn't have a stop loss set at negative 60%, because that's how far we retraced to on the Fibonacci. Okay, so I'm going to go over the VIX, the dollar, S&P 500, NASDAQ, Tesla, Apple, and Google. All right, well, let's just go on, get on into it. Let's talk about the VIX macro level. Okay. First of all, for you newer viewers, I'm gonna say some terminology you're not gonna be familiar with. So I encourage you to please look at these videos that I've already made, especially this one, the big mover patterns, because I'm gonna get into more of that in details momentarily. But please check out those videos, because I'm going to kind of gloss over some of this stuff because I've got a lot of materials to cover. So this morning, as I sent out the alert, it was red, green, red, green, red. This morning, I woke up, I was like, oh no! I saw that. Okay, so so yeah, I mean, it was just a crazy day. Okay, so you see all these red green patterns on the VIX. Now, this is the 4 hour, the 240 minute side right here. See that? So it's at 0.1 and 0.2. Okay, where does 0.2 end? We got to know, because at some point, I mean, I kind of hope it actually keeps going all the way down here like this, like down here closer to the 2, closer to this. It might, guys. Being that VIX closed at 1908, it might. Okay, it just might. Okay, so for you newer viewers, if you don't know what's all this 1-2 business, I encourage you to look up. It is in this video right here, Shifting Tide. Please check that one out. All right. Okay, so. Moving on to the 1 hour, the 65-minute chart. Okay, so now look at the MACD. So 0.1, 2, 3. Now we're getting into kind of a gray area. Where does 0.3 stop? I hope 0.3 is actually lower than 0.2, and it's not a higher low. And we're talking about the 65-minute on the VIX. Okay, so. Overall, though, it still looks weak, and I was saying that last night, and even today when it gapped up and then it gapped down and it gapped down. See, it's still weak. It can't overtake its own EMA 50 line, the red line here. Okay, all right. Dixie, the U.S. dollar. Okay, here's on the left-hand side. Here's the weekly. Check this out. Okay, here's the MACD. I mean, it's it's in free fall. I mean, look at that. The RSI is just like, it's just all the way down there. It's in free fall on the weekly. Let's check out the daily. The daily, check this out. Check this out right here. It's curling back down. It's going to keep falling, guys. I mean, look at that. I think that, okay, I think the Dixie's days of peak, they're done. It's done. Especially now that we know that the Fed has already told us they're going to slow down the pace of hiking. You know, maybe the terminal rate's a little bit higher, but there's no way it's going to get back up here again. It's just not. It's just the MACD has lost complete momentum on the weekly. Now check this out though. Right here, today on the weekly chart, that candle kissed the weekly EMA 50 line. Now we're going to see what's up. If it breaks it, if it breaks this line, I think it's going to be in free fall. See, so things are lining up. The VIX looks weak. The dollar looks weak. It just looks weak. And those are the two things that would stop a rally, right? You guys know that. The dollar goes up, VIX goes up, sayonara, right? The dollar's been going up all year long, but now it looks very weak. So, you know, if it breaks that weekly EMA 50, that's curtains, guys, for the dollar, for Dixie. Okay. Look at the 240 minute here, the 4 hour chart. Look at that on the MACD, lower lows. Okay, for it to bottom out and then start going back up, you need to make higher lows. Okay, you're still making lower lows, even on the 240 minute, the 4 hour chart. Okay, so that's what I want to talk about there. Okay, SPY. Here we go. We're going to talk about SPY. But yesterday I showed this slide, but I want to expand on that. I inserted a new pattern right here. Okay, it's right here. Remember yesterday I talked about the back test phase right here. It's got to pass the back test phase. So that whole discussion was assuming above the line, right? It's got a back test above the line, and then it's going to go up, right? And then here are the candles, and that I talked about the bodies. The bodies must be above or kiss the line, but cannot straddle the line, right? Okay. There, I added this new pattern that happened today, actually today on SPY, and this is the 5-minute chart right here that you're looking at. But it could happen, very well happen, very well happen on the weekly chart. In fact, I think it's actually not only possible, it may be probable. Okay, here's what I'm talking about. So here's the weekly, right, on the left-hand side. EMA 50 right here, right? Weekly EMA 50. What did we say that was? 40372. That's the right there, 40372. Okay, EMA 50. This is the SMA. And this is a 392.46. I'm just reading it right here. See that? See that? That's a tight band. That is almost the same structure as what happened today on the SPY right here. So this is the EMA 50 on the 5-minute chart on the SPY, and here's the SMA 20. And what happened was, as you guys know, it came from the bottom position, came up, back tested successfully on the SMA 20, came up, got rejected on the EMA 50, went sideways, consolidated, came back down. Okay, so it went sideways under the EMA 50, went back down, found support at the SMA 20, boom, and then rocketed up. That could happen, guys. That could happen on the weekly, like next week or the next 2 weeks. So what could happen is you could start from the upper position, lose this red line, lose containment, fall down under it, possibly find the SMA 20 line. I think it's going to keep curling up. Find the SMA 20 line, bounce off of it, come back up, just like this. So fall down. So just pretend like this is the weekly. You're falling down from the top. In this case, in this example, you came up from the bottom, but you can come down from the top, bounce off the SMA, come back up, consolidate just under the EMA 50 line, right? Come down and bounce again. That's how you need this consolidation phase, coming down and then bounce. That's how you can retake the EMA line, even if you fall under it, right? Even if you fall under the EMA 50 line. Okay, so yesterday's example was over the line, but this example could be you fell under the line and consolidated under the line and then shot back up. Okay, so that's what I wanted to show you. All right. Now, so yeah, that's it's very possible. When I saw the pattern playing out today, I was like, ooh, I bet this could happen on the weekly easily, or the daily. It doesn't even matter what time frame. It can and does happen very frequently. Okay, so as you know, the whole year, the SMA 20, the gray line, and the EMA 50, the red line on the weekly chart, has not been taken. It has failed every time. Okay, so so when I'm talking about all this back testing and consolidation and bouncing off the lines and stuff like that, for you newer viewers, I encourage you to please look at these two. Okay, I go in a lot more detail about that. I kind of glossed over some of these terms this time because I've got a lot of stuff to review. Okay, let's look at the weekly chart. Okay, I'm on the right hand side now. Check this out. Check out, I drew these lines into the weekly chart. This is the daily EMA 50, 385.87, and this is the monthly EMA 50, 365.11. So on the weekly, it's now at 403. Oh, I can't quite read. I think it's maybe 64, something like that. That sounds about right. Remember, we went down today, so it was 403.72, but then we got knocked down today, so it lost some ground. So basically, what I'm saying is, now you have 4 levels to compare. So I encourage you on your weekly chart or your daily chart or your intraday chart, whatever chart you know, like to use day in and day out, draw in that support line, draw in the EMA 50 from the daily, the EMA 50 from the monthly. Like in this example, this is the weekly chart, so you've already got the EMA 50 on the weekly right here, right? Then you've got the SMA 20 on the weekly right here, simple moving average 20, EMA exponential moving average for you newer viewers. Now you have four zones to compare the charts to. You have zone 1, zone 2, zone 3, zone 4. You see what I mean? To me, these zones always outweigh any support lines that you can draw. You know how people like to talk about, oh well, SPY 375, SPY 390, whatever. It doesn't even matter. Those always are inferior and are lower priority when you're talking about the EMA and SMA lines, hands down, right? Because all year long, right? The S&P 500 honored, respected the EMA and the SMA lines. It doesn't care about, well, SPY 390. Like, well, so what? That's just a number. That doesn't matter. It's the line. It's these lines that matter way more than support and resistance lines. Okay, so you know. So anyways, that's what I wanted to point out here. These areas right here. And I wanted to call your attention to something. I just noticed this actually when I was putting this screenshot together. I just noticed there's a gap right here. There's a gap it left in mid-August. Yeah, mid-August, or when we started to fall. Right here. So let's make it an open question. I'm not suggesting this to be the case, but it's an open question. Is that where the S&P 500 is headed to? I'm asking the question. I don't know. I'm not suggesting that it is either. Okay, just throwing it out there. Food for thought. You feel free to debate that or not. Okay, SPY. Okay, here's the intraday stuff. Now, all right. So this is the 5-minute. Look down here. 5-minute, 30-minute, 65-minute, 240-minute, 4 hours. So 65-minute, 1 hour, and then that's 4 hours over here. Okay, so I'll just gloss over some of these terms. And again, for you newer viewers who really want to learn, I encourage you to please check out these 2 videos. Okay. All right. Now, today, towards the end of the day, was the first time that SPY, ever since 2 days ago when we surged. Today, towards the end of the day, was the first time SPY successfully backtested against the EMA right here. At the end of the day, like in the final, what, that final 15 minutes or something like that, something like that. But it did it. It did it. That means that's a trend change. Okay, it failed right here. That's that blue arrow. It failed here, but it did it at the end of the day. Okay, now check out the MACD, going up on the 5. This is a 5-minute chart. Up the whole day. See, that's good. See, that's bullish. Okay, look at the 30-minute chart. That's what I was looking at this morning too, when I was saying, oh, I was warning you guys in the morning stock market outlook. I said, don't short it. I see it wicking up. I see it going up. You see what I mean? I'm like, ooh, there's still some buying pressure here, guys. And then I alluded to, because this was the same pattern as October 13th. Remember, that's when the Dow was down 500 in pre-markets, but then it surged. It turned around and actually gained 1,500 on the day, and then it closed at plus 800. Right? It was a 1,500 point swing in one day. This was the same pattern, very similar pattern. Okay, so it turns out the Dow was actually swung 500 points today, right? Because the Dow ended up, right? But you were down like 450 at least. Okay, so it's the same idea. See, so this on the 30-minute pattern, this is suggestive of, see, the markets have already decided it's going to go a certain direction. It's already made that decision. and it's reflecting that itself in the MACD and in all those in the green red patterns that I've talked about in the past. And once again, despite the bad report on the non-farm payrolls right here, said, no, I don't care, I'm still going to go up, and it did, right? Boom, 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 boom. It's bullish. See, that's not bearish, right? I mean, you can't argue that it's bearish. It's still going up, no matter what happens. Okay, because it's already made the decision, just like it already made the decision 2 days ago that Jay Powell, no matter what he says, actually I showed you last night the proof that the markets didn't care what he was. He didn't even step to the mic yet, and the market's already surged. The VIX went straight down, and the market's already surged. They already knew what he was going to say. Okay. So 30-minute MACD. I mean, look at that. It's going up. Not only is it going up, you see separation. You're seeing separation. Okay. And now I think that's positive. It's in the positive zone. Okay. So rate of change looks good, right? Slightly going up. Chaikin Money Flow, look at that. Higher lows. RSI, look at that. Let's say that's strong, guys. You guys have been looking at RSI. That's strong. That's not weak. Look at the hourly. Okay, now this is what I like to see. The hourly is now curling, flattening and curling up above the zero line. That means, oh yeah, this rally still has legs. It didn't. That's what I was wondering. I'm like, oh, are you going to cross down into the zero line on the hourly? Usually that's a problem. Then you start going into the zero line. Ooh, you go on the hourly when you start going into the zero line, below zero. But that's a fall. You're going to fall a lot. Okay. All right. The 30 minutes you can get away with it, like right here. It went below the zero line and now it's curling back up. But when you start going below zero on the 1 hour and the 4 hour right here, so this is the 4 hour, 240 minutes, and the 1 hour is 65 minutes. You start doing it on both of those time frames. Oh no, we're going lower. Okay, when the MACD crosses below the zero line. But look at this, look at that. It's curling up above the zero line. Oh yeah, that's not bearish, guys. That's not bearish. That's bullish. Okay, it's regaining its footing from 2 days ago when it surged. It was just back testing. Okay. All right. So RSI on the 65 minute. Look at that. Just boop. It's going up. Everything's going up. Okay. 240 minutes. 4 hours. Look at that. Look right here. Right here. Look at that. Curling up and it's going back up on the 240 minute. And look at how high that is above zero. That's bullish, guys. That's bullish. It's not bearish. Okay. All right. So that's SPY. Okay, NASDAQ. I've showed you this before. I just want to call attention to. Remember, I drew this is the rising channel. The dots, the dotted lines. There's top of the channel. Here's the bottom of the channel, and these are more sub channels. The straight lines. So, okay, this is what happened this morning, guys. I just want to call this attention. So we gapped down, but look what happened. Huge buying pressure. We gapped down outside of the channel. But buying pressure is, oh no, you're not. You're going to get right back in that channel. See, now we're back in the channel again, right? See that? We're back in the channel. Okay? And this is when Jay Powell spoke, right here. So we were falling out of the channel. Everyone was getting bearish. I was like, oh, no. We're going to rally, guys. Boop. We took off, right? We took off, okay? So, this is good. So this is the 1 hour chart, and no, actually it's a 4 hour chart. I believe that's a 4 hour. This is a 4 hour chart. Oh yeah, here we go. 4 hour chart. 4 hour chart. Look at that separation above zero. That's good. That's bullish. Okay, guys, that's what I want to show you about NASDAQ. All right, TQQQ. Basically the same pattern that you just saw for SPY, so I won't like rehash it all. Like, see that there's the flattening out on the 65 minute, right? Flattening out above zero, great. All this is great. It's basically the same pattern as SPY, so I won't redo all that. Other than I'll just point out the Fibonacci. Oh yeah, we went down to like 60, maybe even 70, 65, 70% retracement right there. I was like, ugh, that is not good. But I always look at on the 30 minute and the 65 minute, but mainly the 30 minute. I start seeing wicks, wick up, wick up, wick up, wick up, wick up, green arrows. Oh yeah, that's great. Because sometimes, you know, you can't just look at this. It's hard to look at this and kind of see where you're wicking up. You need to back off and look at it from the 30-minute perspective. All right, that's how I can really see like this. If you were just looking at this little area, right? This little area right here, you couldn't really tell. Wow, that's a pretty big wick, right? That's a pretty big wick, right? So it helps you keep it in perspective. Okay, that's what I like to use. It's like, no, there's buying pressure. This tells me it's like, this is not a good idea to be shorting. Okay, not a good idea to short this, because you some people are buying when you're thinking it's going to go down. Okay, right? So keep up the 30 and the 65 minute. And that's really all I want to say about this, because I don't want to rehash all the same stuff that I just talked about with SPY. Okay, so let's talk about Tesla. Okay, Tesla, this is the weekly, this is the daily, this is the 244 hour, and this is the 65 minute. On the weekly, it's trying, okay, I want to focus on the MACD. It's still below zero, and it's trying to flatten out. It's trying to flatten out. But I can tell visually that this is a lower low than this. Okay, so that's the only thing you need to keep an eye out for. Now, having said that, on the weekly, you see what I'm saying? It's good that it's trying to flatten out, because you have to have that, because this is still lower than that. Okay. Now, having said that, though, let's go to the daily. As of what was that? First week of October-ish. First week of October-ish, the daily is making higher lows on the MACD right here. See that? Higher lows. So that's good. When you're doing this, that's what makes the weekly start to flatten out. Okay? So it's a good start. So you have to continue this. It's a good start. So since the first week of October-ish is my estimate, you're making higher lows, and on the daily, I see the MACD separating from the signal line. So that's good. That's bullish. Okay? So basically, Tesla is trying to flatten out. It's on the way. And I think that it's going to benefit from this red carpet rally that I think the markets are clearing the way for. I really do think they're trying to now. Look at the VIX down to 1908. The Dixie's weak. The Fed is going to start, slowing rate hikes. They're begging us to get in. I'm not joking. Okay, so now here's the 240. I mean, look at the 240. The 240. Yeah. Okay. See, you're making higher lows, higher lows, higher lows. That's very bullish. that's very bullish. Okay. So the 240, the 4 hour, is going to feed into the daily, and that's going to feed into the weekly. Okay. So as of right now, the 240, the 4 hour, that looks quite bullish to me. You're making higher lows, higher lows, higher lows, and now are you not only making higher lows? You're way above the zero line right there. That's bullish. Anytime the MACD is floating above the zero line, that's bullish, especially on the 240, the 4 hour chart. Okay, so this is the 1 hour chart. I mean, look at this for the last, it's been over a week. Since Thanksgiving. Since Thanksgiving, you're consistently over the zero line. Like, you haven't even fallen below the zero line. That's bullish. Okay? That's a good sign. Apple, let's check out the weekly. Okay, Apple looks better on the weekly. Tesla, as you saw, made a lower low. Apple on the weekly is a higher low than Tesla. So it's not the same direction at all. Tesla's making lower lows on the weekly. Apple's making higher lows. Okay, and it's getting closer to the zero line. Getting closer to the zero line. Boy, if that Apple 100% is going to benefit from this red carpet rally. That's what I'm going to start calling it. Red carpet rally. Okay, so that's a weekly. It's getting closer to that zero line. It's not far. Once you get to the zero line, now you're in position for a full-on bull run. Like bull, not just a rally, but that's bull. What is it? Secular bull. You see what I mean? That's not just here's just a rally, and then we're going to go down further. But you know, having said all that, I mean, not even Apple, I don't think is going to survive what I believe to be the mother of all crashes after this rally is said and done. Okay, after it's all said and done, it's going to be the mother. So I think if you want to swing trade it, I'd say go for it. I don't know how long this is going to last, but you might as well. It's bullish. Okay, so let's jump over to the daily. Look at this. Look at the daily. The daily is pretty much at the zero. Oh, it's actually not at the zero line. It's actually positive. Depends on where I have my cursor. I think it's 0.24-ish. That's positive. So the daily is already MACD in the positive. That's actually that's very bullish, guys. That's very, very bullish. Okay? So, making higher lows. See that? Higher low, onto the positive. Okay? This is the 240-minute, 4-hour chart. And you see here, yeah, the red line is at 0.32-ish. It's above zero, right? And it's separating from the green line. Okay, so that's bullish. And the 1-hour chart, see that? Okay, so it came down, took a dip, and now it's flattening out. It's flattening out above, just above the zero line. That's bullish. If it's able to continue to flatten out, which I think it probably will, that is a higher low than that. Okay, so it's bullish. So basically on all 4 quadrants here, weekly, daily, 4-hour, 1-hour, it's bullish for Apple. Okay, Google. Okay, haha. Look at Google. Okay, so Google is kind of like Tesla. It has a lower low, but I see it trending up now. See that? It's trending up, and I bet. Oh yeah, see. Oh yeah. Oh, that's a daily. That actually looks pretty strong too. Right here. See that? That looks stronger than Tesla on the daily MACD. See that? It not only is it above zero, it's separating right there. That's good. That's bullish. So that's good that this is coming up. Okay. You know, ultimately though, when you're talking like this is the weekly, you know, we're gonna sooner or later we're gonna have a big down week. So what you need to happen for Google is it needs to kind of keep going up forever, how long it can until we start to crash. But then when we come back down on the weekly, this up, when it comes down, it must make a higher low than when this point started right here. Okay, so it needs to go up for a little bit, then come down and make a higher low than this point. That's when you know it's bottomed from a weekly standpoint. Okay, so as of right now, you know, it's better than nothing, but it could be a temporary bottom. See what I'm saying? Because this is still lower than that. I can just tell visually when I look at it. Okay, so 240 minutes. Oh yeah, that's very bullish, guys. 4-hour chart, way above zero, separated from the signal line. That's very bullish. That's bullish. Okay. 65-minute chart, very good, right? It's trying to flatten out above the zero line, right? So it looks more or less like Tesla, but I think Google has just a slight edge over Tesla, maybe, or pretty close, but roughly the same. Okay, so that is what I wanted to show you guys today. If you want to follow me on Twitter to get some more real-time updates during the day, that I was tweeting out during the day today as well, please do so. And if you liked the video, please give it a like, share it with others you know, and subscribe or click to be notified. With that, I do leave you with my calling card. I am Agent 000 signing off.